It has not been Tesla's year to date, but it hasn't been Tesla's last 12 months, as you had price form this massive head and shoulder back during the last bull market, and we had a retest of the shoulders at $300 around psychological number. And since July of last year, price has just been in a steady decline, with levels of interest where price at least paused. Now, the most recent level of interest in the downtrend now is at the $160 level, as you do have support that was established back in April of last year. Now, scrolling down to the weekly, as price continued to move down, it did form this weekly sell level, and that was on earnings. And when price attempted to move back, which would have been a great opportunity to sell, but it couldn't because the momentum is just to the downside. In addition, at the $230 level, you do have what we're going to call a depth cross. That's where the 50 crosses over the 200-day moving average, which signals more bearish technical sentiment. Now, before we continue with the charts, we're going to look at this article which announces more bad news for Tesla. They reportedly scaled back EV production in China, the world's biggest market for EVs. Just to point that out, as it faces slower growth in the sales of new energy vehicles and increased competition in the world's largest car market. According to Bloomberg News, the company has adjusted the work schedule at its Shanghai plant from 6.5 days to 5 days per week for employees, affecting the production of its Model Y SUV and Model 3 sedan. Despite a 17% increase in China's passenger vehicle sales and a 37.5% rise in new energy vehicles sales year over year in the first 2 months of 2024, Tesla saw a decline in its shipment. Meanwhile, it faces a broader slowdown in EV demand, not only in China, but also in the US and Europe. Now, in the first 2 months of 2024, Tesla delivered 132,000 vehicles, marking a 60% decrease from the previous year, with only a 53% of these vehicles sold in local markets, despite price cuts the car maker has been implementing since the start of the year. Now, I think in 2023 they had about 7 or 8 different price cuts throughout the year, again trying to spark demand. And so it hasn't been a good last 12 months for Tesla, but I believe Tesla is a long-term buy, and if you can get in at a cheaper price point, you'll be handsomely rewarded moving forward. So this was that level we saw on the weekly chart, the 160, and just want to show you how that was and remains support. Now, if the next 3 months is or mimics the next 3 months, then we're going to breach the 160 level. And based on the fundamentals, it appears that we will breach the 160 level. And the next best level to buy is going to be this daily buy level at 140. So let's scroll down to the daily chart just to see the formation. And that's where we have a gap higher, right? So although this is support, this is the real level to get long. Again, we are roughly 30 points away, and so that's not very far. We could see that potentially after earnings coming up next month. So be sure I will report to you my findings the next time some significant news comes out or significant price action occurs. Thanks for watching. Subscribe. Please like the video.